What is up, everybody? Welcome back to Benzinga Live. It is the first show of 2023. Thank you, everybody who is joining us today. I don't really know what happened in the markets today. We opened higher. I guess people are tax loss selling already on the first day of January. Not the first day of January, the first day of trading in January, I should say. Let's go ahead and get my Benzinga Pro popped up. We'll talk about the price action we're seeing right now in the Qs as well as the S&P 500. As always, if you guys got any stocks, any trades you're checking out right now, let me know in the chat. We can take a look. I'm also curious if anyone made any New Year's resolutions this year. If you did, go ahead and drop those in the comments as well. Pulling up our BZ Pro, first thing that pops up today. Oh, my Lanta. Tesla is now down nearly 13% on the day. The free fall continues on Tesla. The daily chart here, you can see how ugly this looks for Tesla traders right now. So the title of today's show is, Will Elon Sell More Tesla? So there's been a lot of speculation floating around, whether it's Reddit, Twitter, whatever you want, that Elon could be being close to forced to sell even more after he sold, just a few weeks ago and said when he did, that he wasn't planning on selling at all for the next year or into even next year, whatever. But as Tesla continues to drop, the more likely he is to be forced to sell more Tesla, whether that's, due to certain requirements for tax purposes or due for the Twitter deal. There's a lot of different scenarios in which Elon will be forced to sell more Tesla shares as the price continues to drop. So as Tesla's price continues to drop, Elon's likelihood of selling increases. It might sound a little bit counterintuitive, but that's basically why you saw Elon selling at 52-week lows a couple weeks ago. He's not doing it because he wants to. You're not selling at 52-week lows of your own company because you want to. You do that because you have to. And that's what we saw happen, and that's what investors are fearing now that will potentially happen again. In addition to, of course, the news that came out yesterday that Tesla reported. Honestly, this seems like to me the first time that I can remember since following the market that Tesla reported worse than expected delivery numbers. For the first time, it's always been that Tesla can't even produce enough cars. That every single car that Tesla produces, it's selling almost immediately. It can't keep up with demand. Well, now you're seeing that flip-flop. Now you're seeing the fact that demand can't keep up with the supply. Tesla produced, something like 20 or 30,000 more cars than it sold last quarter. And as economic conditions potentially worsen, I think a lot of investors are sitting there thinking, all right, who's really buying a Tesla in this environment? Who's really going to be willing to finance a Tesla? You had a bunch of people probably who could barely afford a Tesla who were financing one 2 years ago when interest rates were at zero. But now that they're up higher and it's going to be more expensive to finance that car, you might go with a little bit of a cheaper car. And we've talked about on this show a lot about how competition is expected to come in and dilute Tesla's market share of the entire electric vehicle market, which is tough because Tesla's had a first mover advantage, right? It's had the most market share of EVs, but now when you've got Lexus, Mercedes, Audi, you name it, all these cars that can compete in terms of luxury of a Tesla, it's going to be a lot harder to maintain that market share. So one thing that I saw on Twitter today that someone was talking about, that ARC has actually been a really good leading indicator for Tesla. So let's hear if we can see it on. So essentially, if we zoom in here, you can see that before, here's Tesla in the purple. That basically every time ARC has started to sell off, Tesla's crashed hard. When ARC has come back, Tesla has come back too. Here, let's see if we can zoom in. So maybe it's just showing that essentially that Tesla's trading with growth. I mean, it could also be because Tesla's the number one holding in ARC. But either way, Tesla getting absolutely clobbered today, still down. Okay, it's coming back a little bit. Let's go to a 5-minute chart here to see. So yeah, I mean, we hit low of 106.63. I don't know. Did we get below? Okay, no, that's not the low. So we hit a low of... Okay, but that might be after market close. So I don't know if that counts. Here, let's get ARC off here. 104. All right, so I'd be watching to see if Tesla makes new lows on those 52-week lows. Like I said, I mean, you guys know how I feel about this stock, how I felt about this stock for a while. And yeah, I'm upset that... I was upset because I looked a couple weeks ago. I Googled, like, when is Tesla's deliveries coming out? And I didn't realize when I Googled it and saw, like, oh, January 2nd, that it was on a day where the market was closed. I think I saw it was on a Monday. And so I wasn't really prepared for that. I was looking it up because I wanted to buy puts ahead of that. Obviously, shoulda, woulda, coulda. Like, who cares now? Tesla's down 12%. I would have made a bunch of money. But I got chewed up in the price action day. So let's talk about this. Let's talk about what we saw going on today in the S&P 500. I'll pull up the 5-minute chart so we can just see this price action. So futures were trading higher all of last night. I was very skeptical. Part of me was like, okay, it's a new day, new year. Maybe people are trying to put 22 behind them. Tax loss selling is over. Maybe we could start things off right. But I was also skeptical. I thought, okay, I don't think, we're just going to see the S&P 500 rip first day of the year, whatever. But we saw it open. Let's see, where are we open at? Looking for 930 right here. So we opened here, sold off on the open, came back a little bit, and then just basically free falled. Hit this pre-market high of 386 on the S&P 500. We are now trading below 380. So the S&P 500 has sold off more than 6 points so far today, and it's looking like, if it were me, I'd be watching this bottom right here. Looks like you've got some support. Looks like we're approaching this bottom pretty quickly, the 378.50 level around there. And then, of course, if you blow through that, you've got to go all the way down here to 376.75, and then below that, 375. But, I mean, we are now, if we go back to a daily chart on the S&P 500, it's not looking, I mean, here's what, we'll do. We'll look at the, let's look at the economic calendar. See what we got coming this week. See what could be potential catalysts, because the chart's not looking great to me. Wednesday, ISM manufacturing, job openings, quits. Oh, man, I don't know how I feel about those coming in at 10 a.m. after the market's already open. Oh, we have FOMC minutes tomorrow. Hell yeah. That could help or hurt. Jay Rice in the chat is watching Apple. Let's go back to our Benzinga Pro and check out Apple. I honestly haven't looked at Apple today. I'm going to guess it's down 1.4%. Oh, wow. Holy cow. What the hell happened with Apple? This thing was up today, too, this morning. Apple shares are trading lower following a report that the company told suppliers to build fewer AirPods, Apple Watch, and MacBook components amid softening demand. Yeah, I mean, it's not what you want to hear. If you're Tesla, if you're Apple, you don't want to hear demand is softening for your key products, especially, again, in an environment where it's very uncertain right now. There's an expectation that unemployment will increase. There's almost an expectation of a recession that's people are like not spending. They're not buying as much right now because they're anticipating a recession coming, and that lack of spending is causing a drop in demand, which is leading to the recession. It's almost because everyone has this recession set in stone for 23 set in their head. It's like a self-fulfilling prophecy, when I don't know if it necessarily, I mean, my whole outlook on the markets this year has been that I think it's not going to be as bad as people think. Clearly, the market's disagreeing with me today. They're saying, hey, no, Aaron, it is going to be pretty bad out there. We're down another % today. It's incredible how there's such a lack of bullish activity for any sustained period of time, right? Let's look at a weekly chart. So what we got, in the last 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, we went through this one stretch here, a couple green weeks, but for the past 1, 2, 3, 4, 5, this would be the potential 6th red week in a row. Look at the monthly. Just making new low. I mean, maybe it is. We really got to get back to pre-COVID levels on the Q before you get bullish. I don't know. I mean, the Qs would still have a pretty far way to drop from here. So to get down to pre-COVID levels, like February 2020 or January 2020, $220, we'll call it. We're at 262 right now. That's another $42. That's almost a fifth. So we'll call that about 15 to 16% of the Qs to get back down there. I don't know if we're gonna really drop that far. I mean, again, I haven't thought we were gonna drop this far to begin with, so I could certainly keep being wrong there, but need to see CR Apple cut guidance. Yeah, I mean, and I think right now it's not the worst thing in the world. I think that a lot of these companies are, I think, showing these signs of weakness right now because that does a few different things, right? It brings the share price down to a more, a cheaper valuation and a more reasonable valuation, especially in an environment where the Federal Reserve is still raising interest rates. The other thing it does is it just lowers the bar for forward expectations, right? We just saw Tesla miss deliveries, and like I said, it's like the first time in my time following the markets that it's been like a meaningful miss in deliveries. You're seeing the stock hit 12% right now. But now next quarter, if they hit, oh, Crapple, he's saying red is Crapple. If Tesla doesn't hit the deliver, or if they miss slightly next quarter and it's a little bit worse than expected, but it's a better miss than this quarter, the bar for is now lower for expectations. And the third thing that it does, and this could be the most important of the three things, is it gets the Federal Reserve's ears more like perked up, right? It's like, oh, wow. If we see Apple's stock getting crushed and Apple saying, okay, make fewer iPhones, maybe we are really going to like cripple the economy with these interest rates and might get the Federal Reserve a little bit more worried about the other side, right? Right now, and the Federal Reserve is still more so worried about inflation than worried about a recession or worried about unemployment increasing. But as Apple starts giving out these warnings, as Tesla, as some of the biggest companies in the country start, showing these signs, there's a potential, in my opinion, that the Federal Reserve will then have to kind of reconsider, okay, maybe inflation isn't our biggest worry right now because demand is getting crushed so hard out there. And that's the bottom line is the prices will be mostly determined by supply and demand. We saw supply get constrained throughout COVID through various supply chain issues, and semiconductors, all this. That's why used and new car prices skyrocketed during COVID, not to mention stimulus checks that were driving demand even higher. And now we're seeing the exact opposite of that. Supply chain issues getting resolved over time, and demand falling. And that's resulted in a drop of price for a lot of things. And that's what we've talked about. We've seen the CPI come down in a meaningful manner. It hasn't been good enough for the Federal Reserve. That's what Jerome Powell said the last time he spoke, was he said we still need some more evidence that inflation has fallen substantially before we even consider, cutting or slowing down the pace or whatever it is. So, again, the more these bad news come out about Tesla missing deliveries, about Apple, showing demand, does that mean, now's the time to buy? I'm not saying that. And, to quote Alfred from, is it Alfred from Batman? I don't know. Someone from Batman says, the dawn's always darkest before it. Essentially, it sometimes gets worse before it gets better. That could be the case here. But when you hear this bad news, My point is it gets us closer to that bottom. It gets us closer to the Federal Reserve having to pivot. And I don't know. Again, I don't know when that is. If I knew exactly when that would be, I wouldn't be sitting up here at this desk hosting a YouTube show. I'd be sitting on a beach somewhere on a private island because I'd be a billionaire. Because no one knows exactly what the market is going to do. If someone tells you they do know what the market's exactly going to do, run away because they're lying to you. Another thing I'm watching, so I talked about this, last week. I talked about this with Dennis and Joel, actually, on pre-market prep. But watching energy right now is something that I like to do to try to give me an idea of how the markets, not just the stock market, but kind of the overall financial markets of the world view the economic outlook, right? If it were true to me that like a global recession were imminent, that Europe, the US, whatever, demand across the board, all throughout the world is about to go down or be shitty for the next year, we're all about to be in a recession. To me, XLE, the energy sector, would be a lot lower than it is right now. And I've showed this before, but going back to 2008, and I'll go way back here on the chart, you can see how energy traded in a time of financial ruin. It went from $90 in July of 2008 to a low of $40. So literally cut in half the XLE. Now you compare that to here, yeah, we're off the peaks for sure. But from 95 to 85. So the energy markets aren't saying, okay, we're at '08 levels here, or at least we're not there yet. And the reason that matters to me is because the energy, the oil demand, whether you're looking at oil demand in China, Europe, the United States, that's what's going to show how much business is being done, how much travel is, dawn is always darkest before the storm. It's always, what did I say? I don't even know. How did I butcher it? Or I definitely didn't say the right thing, I don't think. But you know what I was trying to say, James. Yeah, Jay, I'm kicking myself because so I had some QQQ calls that I basically was forced to hold into today, and when the market opened here and it actually ripped up, so this is at like 950, I sold my calls, and I sold them because I literally was like, this like very, very easily, and I thought could be the top of the day. And I was like, maybe I should like buy some puts. And I literally thought, I was like in my head, I was like, oh, Aaron, like you're getting, like you just made some money on these calls. Now you're getting way too risky, or not way too risky, way too greedy buying puts, essentially, like flipping long to short, whatever. And I was like looking at the puts on my Robinhood, didn't buy them, saw the Qs start coming down, was mad that I thought I missed my short opportunity. So then when we got down here, was like, holy cow, we're getting way overextended. Bought some more calls, and now, of course, I'm way underwater on those. So very poor trading execution for me today, just in the sense of, again, to recap, I went up when the market went up right when I opened, sold my calls instead of either just taking the crow caught a massive piece of that. And I wouldn't have even bought more calls on the day if I didn't miss out on that short trade, when I could have just still bought puts. Like I'm looking right here. So we're looking at a 2-minute chart here. So let me zoom in. When we sold off here, when the Qs dropped 0.5% in 2 minutes, kept going. So this is 2 minutes, 4 minutes, 6 minutes, 8 minutes, 10 minutes. So in a 10-minute period, we went from 270 to 267, say, dropped $3 on the Qs. I was like, all right, like I think we'll get a little bounce here. And I wasn't buying calls to hold all day. I just thought we'd get a little bounce. Bought some calls here, continued moving lower. And now we're still continuing to move lower, by the way. We are now down more than 1.3% on the Qs on the day. Really rough day out there, honestly, to start the year. And I think it's more rough because of the fact that we were up here, that we started the day higher, and futures were higher all morning. For some reason, to me, that makes it a worse price action day for the market. Like that shows me that even seen, because what you typically see is buying begets more buying, selling begets more selling, right? When the markets are up, people want to buy, people want in on that action. And same thing when people want to sell, they want to get out. And so, to see us trading higher all morning in the pre-market, and then, get a little bounce off the open, and even that didn't get people excited enough to start buying. People, I think, are still just methodically selling. There's no fear. There's no capitulation in the markets. We have not hit any sort of capitulation point. I do think, Tesla, ARK, MicroStrategy, these are three names to really watch because they have, come down a lot and corrected, but I still don't know if you would, I guess you could argue you've seen essentially a lot of forced selling in Tesla, especially if you consider Elon Musk. MicroStrategy, you can see the chart here. Let's go back to that Tesla chart. But there's a case to be made that you really want to see Tesla get back down to 40 before, that could be the capitulation point for the overall market or for ARKK. Because I think a lot of people would look at these things and still tell you that they are very, very overvalued. I don't necessarily know for Tesla. I think it all depends on how many cars they sell the next 4 quarters. Is the growth coming back? Is the growth gone forever? But the market cap for Tesla is still nearly $400 billion. So you compare that with companies like Ford, who's $46 billion. And Ford sells a lot more cars than Tesla, by the way. So no need for capitulation. It's a steady grind lower. May never get it. Well, that's what I'm saying, Jay. Is I'm saying I think a lot of people are looking for some sort of capitulation point to go long the markets, because without like a forced selling, panic, fear moment, like you said, the capitulation or the steady grind lower just seems unrelentless. It just seems to go on every single day. And I don't think people really want in on that right now. All right, let's go back to the Qs on a 2-minute chart here. See if... All right, here we go. We're coming back a little bit. Tesla, it's not only a car company, Maria says. I understand that, and I understand Tesla does a lot of stuff, and it has all these different things and all the energy stuff. But if your revenue is coming 99% from vehicle sales at plus, well, here's the other thing, actually. So Tesla's other biggest component, revenue-wise, besides selling cars, is through selling tax credits to other companies, or carbon emission credits. Carbon tax credits. So without those two things, right, it's not like Tesla's bringing in a bunch of money from its Powerwall or its, solar panel, which maybe someday, again, I'm not like a huge Tesla hater or anything. I'm just saying I still think there are a lot of people out there that when looking at the fundamentals of it, even though now when you look, the PE says the forward PE is 24, and you might think, oh my God, that's the lowest I've ever seen it for Tesla. I'm just saying there are a lot of people that would still look at the valuation of this, $388 billion, again, against Ford's $48 billion, and say, okay, is Tesla really 10 times, or should Tesla really be worth 10 times Ford still? And that's where we're at. At one point, it was way more than that. And it all depends on what you think the growth outlook is. If you think Tesla by this time next year is back on track and crushing delivery numbers every quarter and the growth is increasing, then sure. Bomi Hunter says, point is nobody's buying Tesla. It's going down. Deal with it. I'm not sure if he's talking about the stock or the cars or both. But yeah. All right, guys. I see our first guest hanging out backstage. My man, Matt Giannino. He's got about 100,000 followers subscribers on YouTube. I'll drop that channel in there. But without further ado, once I get a thumbs up or something from Matt, I'll go ahead and give him our special intro. Bring him on the show. See what Matt's been trading, see what Matt's been watching in these very turbulent markets. Again, let's do one more quick check on the indices before we bring Matt on. S&P 500 now down about 0.9%. Looking at the 2-minute chart here, we are at or near the lows of the day. Dun, dun, dun. Q's down 1.3%, going over to the Dow Industrial Average, your grandpa's favorite ETF, is down 0.6%. So across the board, red day, bad day. Why are people tax loss selling already? It's just the 1st of January. But all right, guys, without further ado, let's go ahead and give Matt that special intro. Bring him on the show. Mr. Matt, how you doing today?
Hey, Aaron. Appreciate you having me.
Well, I appreciate you
on here.
Yeah, I appreciate you I appreciate you coming on again. So, for those who are new with us or who aren't familiar with you, you want to give just a brief introduction to yourself, your channel, what it is you do?
Yeah, for sure. So, we trade options mainly. So, I started my channel maybe 4 or 5 years ago when option trading was not too popular. And then COVID happens, everyone's an option trader, and everyone's got an option trading YouTube channel. So, we've been doing this for a while and been in this market for almost
$40,000 in my small.
Sorry, I was trying to show your channel and the video started playing. Go ahead.
You're good. Yeah, I appreciate that. Yeah, so just been trading myself and been on YouTube for a while and just staying in this market, staying alive. Can't complain.
Yeah, I mean, if you're staying alive in this market, then you're doing something right. I gotta say. So, what would you say, I mean, in terms of, and we can touch on a bunch of different option stuff because I trade options too. We talk a lot about different options on the show. What would you say kind of is just your like general option strategy if you have one?
Yeah, so I was just listening to you talk about Tesla. And I think one of the main reasons I've stayed alive in the last 6 months, more so than the most of the months last year, is just by not buying dips because everything's cheap. I think just because it's cheap is not a reason to buy anymore. Unfortunately, it's just getting crushed for growth and tech. So it's a tough market right now, and everyone's looking at these dips excited, but I've stopped buying dips like almost 8 months ago.
Yeah, I mean, it's incredible. I think just how I think there's still like it's weird because obviously I think retail investors have gotten a lot less bullish. It's not like the COVID markets anymore where you could just, look at anything and it was going up. But even though people aren't as bullish and there's not that mania in the stock market, it seems like to me there still is a lot of kind of like relentless buying still. Like retail just still saying like, all right, like I'm still going to buy some SPY, still going to, like we know this is going to come back. And I don't know, like I've been watching, kind of sentiment among retail investors and individual investors, and I've been waiting for that like fear and to really increase and peak. And I don't know if we've seen that yet. I don't know if we've seen that happen. What do you think?
I think at this point, like the higher interest rate and high inflation is like two things that just leave us with no options to reduce, the factors out there. So the Fed is, as they say, no bullets. And until we get any bullets, this market is just going to have that downward pressure for a long time. So the only reason we had bullets in COVID because we could print money, and we lowered the interest rate down to 0. So that those were like all of our bullets, and we used them all in COVID.
I miss those days.
Yeah, and I mean the best part about this market is like it's going to trade sideways for years. It's great to be a dividend holder. Great to sell options. It's tough to be buying high valuation stocks and being patient because you're just going to pay the price, as we see from Tesla and ARK and Palantir and all these big like new IPOs last year might be getting delisted soon.
Yeah. So I mean, what do you think in terms of like? Does the Fed have to start cutting before you see any sort of bullish activity, or do you think you could potentially see that bullish activity come like a few months before the Fed starts cutting?
Yeah, I've looked in the past to see like the correlation between rate cuts and bottoms, and they're actually pretty on point. So they end up cutting rates when everything gets really bad. And that's what we saw like 2008 and COVID and 2000. There's just like a massive drop in rates when they see the factors just looking terrible. But um, we really have to control inflation first to get that opportunity, or else they might hesitate. And, we could be in a really drawn out recession. So personally, like if we see any rate cutting, or I don't know if stimulus is ever going to happen again, but a rate cut down to like two would be a great 6 to 12 month period, and maybe an opportunity for like a multi-year run after that. But that's what I would wait for personally.
Yeah. So you're basically saying with your kind of prediction, I guess, of the market trading sideways and stuff, that growth isn't really where you want to be right now, Matt. Do you think there will be a lot of people who, even as like if the economic conditions start to look better, maybe the market even starts to look better, do you think there will be a lot of people who are buying like different stocks this time around, that retail might be, oh yeah, there's ARK over there, but I don't want to touch that anymore. I'm going to go buy me some, Walmart stock.
Yeah, totally. I mean, I think people are going to get fatigued from cutting their account down from consistently, buying these pump story stocks and getting burned and trying to buy it again and getting burned. Like the AMC crowd, they're going to dwindle really fast in the next like 2 years. There won't be many apes anymore.
Yeah, I mean that. Yeah, I mean that you probably already has dwindled a lot. But all right, so Matt, so let's talk about what you're kind of doing right now in terms of these markets. Like, are you simply just buying options, but just buying more puts than calls right now? Are you selling some options? What are you doing right now to navigate these markets? And if you've got a screen or something you want to share, you're more than welcome, or charts or whatever you want.
Oh, for sure. Yeah, I can throw some stuff up.
Yeah, if you want to. If not, I have my Benzinga Pro too. We can pull up charts on mine too. Sorry, someone asked, is Tesla still going down? Tesla's currently down more than 13% on the day, but it did come off its bottoms from about 15 minutes ago. So it got down to about 106 flat, and it's at 107 flat now. So you're about a buck off the lows. I don't know if that means anything to you out there, whoever was asking, Diego, but yeah, you're about a buck off the lows. All right, Matt. Yeah, I got your screen here. I'll go ahead and pop that up.
yeah, I can talk about the transition I've made, because I've been buying a lot of the dips and just tired of getting burned, and so I've been adapting to the new market. Uh, First thing I'm trying to do is just automate. So strategies I know work. Um, maybe they're not working this week. I'm starting to just program that into a trading bot. So it just trades that strategy when it's working, and I don't have to switch over and figure it out. So I got a lot of alerts in here I've been testing, and bot trades we've been getting forward testing data on, and trying to automate what was working in the past. And now I'm switching over to mostly just option selling. So we're doing a lot of spreads, and getting into now like iron condors and iron butterflies. So I don't know if you guys are hot on that, but this is the type of market to just crush short options.
Yeah, and I was beating myself up today, Matt, because I came into the day holding some QQQ calls that expired today. And the Qs actually went higher off the open. I timed the sell of my calls perfectly. And then about 10 minutes after the open, and was looking at puts that expired either like today or tomorrow, and didn't buy them because I was like, all right, I'm not going to get too greedy. I just made some money going long on the open, and we end up,
Yeah.
kind of ripping a higher off the open just a tiny bit. And then I ended up looking at the puts, decided not to buy any. And of course, I checked like, after the market came down, and they're up like over 1,000. I would have like gotten 10x my money had I bought those puts. How do you deal with, I mean, if you're trading options day in and day out, like you probably see a million trades every day that you miss or didn't take. How do you deal with that?
Yeah, that's a great question. So You were gonna buy puts like at some point in the day, you're saying?
Yeah, so basically I was long, sold my longs, and
Yeah.
like considered flipping to short, and instead just like sat on the cash. Well, actually, no, that's not even the worst part. The worst part is then when the market went down, when the Qs went down. What kind of time frame are we looking at here?
This is the 1 minute. So
1 minute. Okay, so right when the market. Oh no, here go over to not at the open.
yeah,
Oh, sorry. Are you on the West Coast?
this is a mountain time. So 7:30 is
Oh,
my
7:30.
open.
Okay, so 7:30 is your open. So we 7:30 there. We went higher. I basically sold my longs somewhere around that top. Didn't go short, but then after we came down, I was like, all right, now we're getting too far overextended. Bought more calls. The market kept going down. So my greed kicked in after I didn't buy the puts, bought more calls, which still up on the day, but I was just beating myself up for like kind of a poor trading strategy at the open there.
No, I mean, Aaron, I think that's a great execution. It's just, we're in a crazy market, man. I did the same thing too. I went long Apple at the open, scaled out, double dipped, got burned on the double dip. So cut a loss, and then Apple just kept dropping. So that's why we got stop losses. But I don't know if you guys use advanced decline. I talk about this all the time, but the ADD is like your best measure on internal strength in the market. And so there's like 3,000 ish stocks on the NYSE. So 2,000 stocks this morning were bullish. And so you see that number and you're thinking buy the dip.
Sorry, what is this? The ADD? What is this?
Yeah, advanced decline. So it's like the amount of stocks advancing versus declining on the NYSE. So if there's 2,800 stocks in the NYSE, if 2,000 of them are moving up, and that's what happened this morning, you buy the dip because that's a very strong day.
Yeah, it's some pretty good breadth right there. It's like good. You want to see that there's wide strength in the market. It's not just Apple up 3% on the day carrying the market.
Yeah, so great buying opportunity, but I bought the dip. But then what happened is we went from 2,000 down to basically we hit 300. So you basically lose your whole strength in the first hour. And that rarely happens. We rarely give up that strong reading. And that's just a tough day, honestly. But whenever you see a strong reading like that, I like to just ride long waves. And we didn't get that.
Yeah, no, I mean 100%. I think that's something that I like looking at the market breadth. That's a good way to look at that. I wasn't really familiar with this exact index. And another thing kind of like that I've been doing, Matt, is I've been watching the XLE and just energy kind of more as a whole, because the XLE, if you look at it on like a daily chart, is still pretty like high relative to the rest of the market, to closer to its highs. And to me, just if the market's pricing, saying like energy is still close to the highs, then that to me is saying there's less. Like the more I see XLE trade down, the more worried I am about a big overall global recession. Because that's basically saying that the market expects demand for oil and gas, which energy is obviously necessary for all business, travel, whatever. Expects it to decline. Whereas right now, it's like you're showing on the chart, kind of been going up. Where I'm like, oh, maybe things are actually going to be okay in terms of. I'm not talking about the market right here. I'm talking about the economy. If energy is holding up.
Yeah, that would make sense.
The flip side to it is you could just say energy could be getting ready to come. XLE could be getting ready to come down. I don't know. I mean, that's what I'm saying. That's how I've been trying to like look at it and interpret it.
Yeah, I mostly follow oil. I don't really follow the XLE, but like U.S. oil. I just follow that because inflation, if this is high, we're still not beating inflation very well. But I'm sure this correlates to XLE. Like if oil prices are high, oil companies are probably going to sell more profits, But
100%.
If demand goes down too.
Shout out Alvin in the chat. Matt's got some fans in the chat. Smash the like from Matt.
What's up,
all right, so Matt, do you have any specific, trades or stocks or charts you wanna talk about, or things you I know you
Yeah.
mentioned the Apple trade earlier.
Yeah, I can tell you what I'm mostly looking at this week. Going into the week, I think Dow stocks looked very bearish last week. You can see Dow here, has a false break opportunity to really come back inside this big pattern. I thought we were going to rotate out of value into growth and tech again, but it seems like we're just going to rotate out of everything.
Yeah. You typically think, yeah, if there's like certain industries showing weakness, there might be some showing strength, but it doesn't really seem like that today. It just seems like everything, like you said, we're rotating out of.
Yeah.
Yeah, been a tough day.
Crazy.
I'm very surprised at the lack of any sort of like bullish activity.
I thought at the open we would just have a great week, but this is showing me it's just all traps, man. It seems like we're just getting trapped. They're at 384 on SPY consistently, and what's worse is like values selling off. Like I got some of the best stocks all time just looking terrible, like McDonald's and Kraft Heinz. Those are some of the plays we've been looking at puts on. But then Apple, like Apple's a great value stock too, and it's getting destroyed. So it's not a good sign when nothing's being propped up here.
Yeah,
I'm
not a
mostly
good
looking
sign
at
at all.
dividend plays to sell off, honestly.
That's an interesting. Yeah, try to find stocks with high dividends. You're saying?
Not high. I mean, it seems like value in general, if it has a good PE ratio and a good dividend, it doesn't look great on the charts. Like I got MCD here, breaking through major demand, has a gap fill right in its face at like 256. I got Pfizer, same thing. It's at major demand. We break through here. It's just you fly through that level. FedEx, I mean that's a pretty good value stock too. That one hasn't really sold off yet, but they're all looking very weak. Verizon too.
I see Jay Rice in the chat saying he doesn't think Apple's a value stock. I think, Jay, you could make the argument either way. I actually would. I think with just how much cash the company generates like each quarter, it'd be hard to. It's not a growth stock at this point, so.
Yeah, I don't argue with like Warren Buffett. Like
yeah, exactly. Right. If the shoe fits, right? If Warren Buffett has a whole portfolio of value stocks and buys a bunch of Apple, not only a bunch, his biggest holding, right?
Yeah, like 30,
or one of them. So
his portfolio.
Yeah.
Well, so I would consider value like valuing the investor, and so they pay a great dividend, they have great cash flow, they consistently buy back shares. That's value to the investor. Like there's no stock that has really bought as many shares as Apple in history.
Yeah. So going back to you were saying like if we do start to see some strength going into growth, into tech, what are your favorite names in that space?
Growth in tech. It's just hard to. I feel like we just had a harsh breakup last year. It's hard to go back to those names again.
Well, that's what I'm saying. Like, would you want to go with like the high growth ARC names, the Rokus, or would you want to go with more like the Googles or Microsofts?
So my goal personally is to just wait 6 months and then buy a crap ton of dividend stocks, and I'm going to have like portions of my portfolio in some leveraged ETFs. So like the Tesla ESLL is a leveraged Tesla ETF. At some point, this is going to be an opportunity to buy Tesla with leverage, but I'll have majority of my money in like dividend stocks and just wait for the interest rate to come down and then rotate over again.
Yeah. So what in terms of just like portfolio structure, how do you do that? Like how much of your portfolio is allocated for options trading? How much is it allocated for like long-term investing?
Yeah, it definitely switches like all the time. I basically run off the rule that like if the market, I just want to invest in momentum. And all I do is I throw on a Ripster cloud and just look to see if the market has a bullish cloud. And I don't want to be holding anything if we don't. So like right now the market has two bearish clouds on the weekly chart. I'd rather just sit in cash and not deal with the headaches of the volatility. So if the market was presenting bullish opportunities, and when we saw the charts line up, start going more into stocks, and I divvy up money more aggressively into like leaps and growth stocks if we had those trends. But until we do, mostly in cash, and with that cash, mostly selling options. So doing just small covered calls, cash secured puts on stocks here and there.
Nice. Yeah, and I think that's a good strategy too, especially when you see, when volatility is a little bit still higher than normal. On a day like today, the VIX is going higher. Like you want to be selling. Selling options is really a strategy. That a lot of people, I think, trading don't even consider employing in their trading, but one that can help them a lot.
Yeah,
Different spreads.
It's insane. Do you do any type of option strategies?
Yeah, I'll do like if I'm selling, so I'll usually typically if I'm selling options, it'll be through like a credit spread.
And do you do that regularly? Just credit spreads?
No, I mean no. I right now I buy more just like options, calls or puts than I do credit and debit spreads. But I've been doing more credit and debit spreads throughout the past couple months. But still not as much as I've been just buying options.
Yeah, I think eventually the more you trade options, the more you realize like it's better to just sell them.
Yeah, I know.
I've been in 0 days, man, where like just 5 minutes and I'm down like 10% from like a no move. Like just trading literally sideways for like 5-10 minutes.
It's tough, and I think that's what you hear that a lot from a lot of options traders, that like if all you're doing is buying calls and puts, like eventually you will, just be like break even at best. Like it's almost impossible to like do that over time and be making money. But I typically, Matt, like will just kind of like buy some YOLO options if I'm feeling like, like if I'll buy like a couple $100 worth of SPY calls that expire tomorrow if I'm feeling like really bullish on that day. But I know it's just a bet. Like I don't treat it any differently than if I were going to the casino. So that's not how I really like to like invest and pick stocks. It's just something I kind of do like for fun on the side.
Yeah, I mean, if you have the right indicators and the right like setup, there's great risk to reward in like an overnight swing. If we have like an outside day, like you nailed the calls for triple Q. How much were you up at the open?
Percentage wise?
Yeah.
Let's see. QQQ calls. I'm gonna say I bought them for. All right, wait. Here we go. I sold 5 contracts at $199, so we'll call it 2. Let's see what I bought them for. I bought them it felt so long ago because I bought them. All right, so I bought them for 53 cents and sold them for $2. So about triple.
That's huge.
Yeah.
That's insane, dude. Yeah, that's like.
But see, that's what I'm doing. I'm buying like cheap out of the money calls, and then when they hit, it's awesome. And then now I'm down on the calls that I bought after that, but I'm still up on the day. But now I've basically given up like the majority of those gains, continuing to trade options instead of just taking that like quick hit and running.
Yeah, so you asked earlier, like, how do you not overtrade, or how you like something like that? Didn't you ask a question like that?
Yeah, well, there's a couple different aspects to it. So that's the first part, not over trading, and as I think, because like you could be sitting at the computer market opens, bang, bang, bang. All of a sudden, like you're up $1,000, and like it's exhilarating. It's fun, especially when you're doing it right and you're making money. You want to keep doing it, and then next thing you know, you're like, holy cow, I was up $1,000 5 minutes after the market opened, and now I'm like down on the day, or now I'm even, and it's just like that. That's part of it. How to overtrade. The second part, what I was asking about, was just like, I don't know. I do this a lot where I beat myself up over it. This is where I almost flipped and bought the puts. Like I was literally looking at the puts on Robinhood, how much they were, didn't buy them, and then the market went down like 50 points right away, and I was like, oh my god, I missed that trade. And it's just like, that's the second part, beating myself up over missed trades, and then the first part again is just like not over trading.
Yeah, those are huge things to get over when you first start, and it's tough, man. Like I think the problem is everybody posts huge gains all the time on the internet, and you feel like you have to be hitting like $1,000 a day to keep up with them.
Well, I don't know if you've been following or checking out Wall Street Bets recently, but the huge gain postings has been now switched to people posting their biggest losses, which is,
oh my goodness,
actually does make me feel a little bit better when I look on I'll look on there and see someone that lost like 20 grand in a Robinhood in a week. So I'm like, hey, even if I'd made some stupid trades, I didn't do that.
Yeah, that's true. So I had this riddle in my head that's like, is it better to make 40 grand and trade 100 times, or is it better to make 5 grand in a month and trade 3 times? And like over the long run of trading, like what I've noticed is like you can hit like 10x account runs, you can hit some like huge wins, but sustainably it's better to just trade less, trade the obvious, and not put yourself in the position to be like emotionally upset and throwing back your gains and going back at it. So that's kind of why I've been transitioning to just selling stuff, because the less you do, the more you make at the end of the day.
Yeah, and there's a time aspect of it too, where it's like, okay, if you can make a couple trades from, right when the market opens. I mean, shoot, you're out in mountain time, so from 7:30 to 8, and say you make a couple trades, make a few $100 or whatever. Nothing's gonna make you like a millionaire overnight, but if you just stop, then right there at 8:30 in the morning, now you have the rest of the day. Versus if you're sitting on your computer all day trading until the market closes, then you might squeeze out a few more extra bucks, or you might lose more money, or give up some of your gains, and it's like now you spent your whole day doing that, when instead you could be out, doing something else.
Yeah. And so like scheduling things in your days, huge. Like if you can go to the gym, if you can have meetings right after the open, if you can just go hang out with your family, it kind of breaks up that choppy part of the day where you're almost like teased to do something that you shouldn't be doing. But yeah, that's something I do too, as I schedule a lot of stuff in throughout the day.
Nice. That's a good little strategy, I think.
In just the last 30 minutes to an hour and the first like 30 minutes to an hour, I keep open for the scalp opportunities, but mostly try to stay busy for the crap part of the day.
Nice. All right, Matt. Well, we're coming up on the half-hour mark here, so I'm gonna see if we've got any questions for you from the chat. Bomi Hunter 74 says, "Great advice, thank you." But I really appreciate you coming on the show today, Matt. I thought this has been a really good conversation, and I'm always down to talk some options.
Yeah, I appreciate having me, Aaron. And nice swing, nice spot.
Yeah, I'll tell you the next time I see one of those. I guess the second one today I tried to swing, did not work out off the I just figured like, hey, we were gonna get a bounce eventually on the SPY, like down like 1% in an hour, and then we just never got one. So I got kind of chewed up there.
Hey, that's why stop losses were made.
There you go. Yeah, there you go. All right, Matt. Well, enjoy the rest of your Tuesday. Like I said, we'll get you back on again soon. We'll talk some more options. I'll post your channel in the chat for those of you that would like to go follow and subscribe to Matt.
Appreciate it. See you, Aaron.
See you, Matt. Alrighty, guys. That was Matt. Market moves. Go ahead and give the channel a sub there. Yeah, if you guys actually want to see, sure, frick it. We'll go full transparency. That's what we're here for on the day. Or that's what we're here for. Oh my God, that's not what I was trying to do. I'm silly. Silly boy. Silly, Aaron. You guys can look at my Robinhood. I have nothing to hide. So, yeah. Market opens. Bang. I'm up $700. I'm feeling good. You can see how flat this is up here because this is where I sold everything. And this was literally the market top at like 950. And then here's where I started looking at puts. And this is why I sold them. If I would have thought the market was going to keep going higher, I would have like trimmed or just sold some of them. I sold all of them because I thought this could be the top of the market. And I was looking at puts. Didn't buy the puts. Market starts going down. Then I'm like, shoot, I missed my opportunity to buy some puts. You know what? We'll probably get a bounce here. Here's where I start buying some calls. And I get chewed up on the calls. You can see my calls right here. This is today's return. Bang, down 93%. Bang, down 95%. Bang, down 30%. Bang, up 8.7%. So, yeah, I don't really know. If we rip this afternoon into tomorrow, I can make some of that money back. But definitely overtraded the day away. Hey, look, bright side, say something nice about AB's portfolio. It's still up over 10% of the day. Wow, now up over 13% of the day. So, I'll keep you guys filled in on what's going on with that. Dumb, genius move by me, and then it ended up being a dumb move. Kind of like, I see Andrew Weiss is right here. He'll like this. On, well, maybe he won't like this. But on Saturday, what it was, I threw a bunch, what? Why is he looking at me like that? I threw a bunch of money on Michigan Live when they were down like 2 or 3 touchdowns. And I looked like the biggest genius ever. Like, my friends were like, oh, my God, the game's over, like, whatever. And then they brought it back to within 3. Looked like a genius. Nope, lost all my money. But, hey, it was still the smart bet. It looked like the smart trade at the time. I was dealing with the information that I had available, and it didn't work out. But, anyway, going through the chat, MSGM just wild. Let's go check out MSGM. Let's go back. Oh, whoa. What the hell just happened? You guys see this? We just checked my portfolio was up 10%. Now it's up 20%. There we go. There we go, boys and girls. It really is good. All right, let's check out MSGM on the, wow, 162%. Is this thing halted right now? Here, let's go full screen here. Holy, look at these candles. This is a 5-minute candle where this thing went up 17% in 5 candles. So I did talk about, all right, hold on, I'm about to sneeze. All right, so give me, I made this point on the show a couple weeks ago, and let's relay this back to what Matt was talking about earlier. So one of the indicators, the advanced decline metric that Matt was talking about, essentially shows the market breadth, right? And you kind of want to see overall strength throughout the market. You want to see, like, you know, Matt said there are 2,800 stocks on the NYSE. You want to see 2,000 plus stocks green. You want to see the overall market have wide breadth, not just a few strong stocks, not just Apple and Tesla green and everything else is red, but Apple's carrying the market, you know. That's part of it. The other part of it that I'm watching right now is speculation like this. Me seeing a stock go up 170% in a day shows me that there is speculation returning to the market that I didn't see a lot of a few months ago. I'm seeing more of these little biotech runners up 100x% getting halted the past couple weeks than I have before. I don't have the data in front of me. I don't know what the statistics are for 100+% runners, you know, throughout the past like few. I would love to see that data if someone's got it. But I would venture to say it's been higher, which again, to me, I'm not saying is a great sign for the market. You could say it's the opposite. You could say it's a bad sign you're seeing these stocks go up so high. And I'd hear you out on that argument. I think there's an argument to be made about that. But it is showing me that there's speculation. There are people out there willing to take risks. There are people out there willing to buy stocks that are up already hundreds of percent. We saw that a lot during the crazy COVID markets. Seeing some more of it now. Oh, man. All right, guys. I might need to hop a little early and manage my trades. This is getting dicey. Let's go back to the SPY real quick. We're coming off again now on the SPY. With a 5-minute chart here. We got a big green candle here, up about 0.25%. Major indices are lower on the first day of trading 22 amid continued concerns over hawkish Fed policy and potential recession. Yeah, I mean, I think this Apple news really just kind of crushed the market. Or just reverse split short covering. Yeah, that could be part of it too, Jay, for sure. All right, guys. Well, we have no more guests. I think we're going to wrap the show just a few minutes early. And Money Mitch will be back at 1. The redirect is set to bring you over there. But, yeah, I mean, crazy first day of trading so far in 2023. Looks like I don't know. I mean, I don't know if the whole year is going to look like this, where we're just getting whipsaw days where we're up 0.5%, down 1%, up, whatever. I'm sticking by my 2023 prediction. Today's action is not going to change my mind. I've got the bowl in my hand. My price prediction. Let's do this. Where does the S&P end the year at? Where does the S&P end 2023? I'm going to say at $450, the SPY does. $450 is my end of the year price prediction on the S&P 500, 4,500. It might sound bullish, might sound crazy to y'all, but catch me in October, catch me in November, catch me in December of this year, and we'll be talking then. And that's just my, again, crystal ball prediction. My hot take of the day, not investment advice. It's for entertainment and informational purposes only. Let me go ahead and get that disclaimer up on the screen. All right, now my portfolio is back up to only up 13% of the day now. Damn. Come on, SPY. Come on, baby. If SPY comes back down again to the bottoms of the day, I'm triple dipping. I'm going big. All right. Money Mitch will be coming up with y'all at 1 p.m. Till then, we'll be back tomorrow. Peace. Based on what, Topher? Oh, the 4,500? That's a good question. I just don't think we're going to get all the way back to the highs, but I think we're going to get up to, let's do a percent change calculator. I like round numbers, which is part of why I picked 450. What are we at right now? 379. So we'll go 379, 5 to 450, calculate answers, an 18% increase. So also, okay, so 18% of the year, you might think, oh my God, Aaron, that's crazy. That'd be like a huge year for the SPY. But if you think about, and I guess, you had the preceding year too, but if we were down on the SPY 20% last year, shorts got toasted. Oh, in the runners, yeah. Alrighty, y'all. Again, we'll be back tomorrow. If anyone, feel free to post your entry prices. I agree. On these stocks that are up over 100%. What are you guys getting in at? Feel free to give me a follow on Twitter at AaronBree5. Going to go ahead and drop that in there. Again, without further ado, we'll be back tomorrow. Peace and love, y'all.
This is Ben.